channel mentor session. I'm here again with another very interesting educational content. Today's video topic is going to be Quasimodo entry pattern, or sorry, QMR and liquidity concept. So first of all, let me start with what's QMR. QMR it means Quasimodo entry pattern. QMR is one of the many advanced SMC entry patterns. There are many advanced SMC entry patterns. I've seen many SMC traders, I've seen them trade liquidity and other block, breaker block and other block, and they completely leave out QMR. But QMR is one of the best advanced SMC entry pattern, and everybody should know what the QMR is and how to trade them. Most strategies also have QMR. I think MSNR, they call it head and shoulder. Some of them they even have the one that doesn't really have liquidity, and the rest, like they call left shoulder, right shoulder. But yeah, QMR is just one of the best entry pattern, and everybody should know how to trade it. Let's get into the video. One of the basic problems in QMR is identifying QMR. It's very important to know how to identify your QMR setups. In QMR, we have three types of QMR setups. I'm not talking about buys and sells differently. I'm talking about both in buys and in sells. There are actually three types. We have the A plus setup, the B plus setup, and the C plus setup. So here is the A plus setup, here is the B plus setup, and here is the C plus setup. This is in buy scenarios. I'll draw them out also in sell scenarios. But let me explain what makes them different, because in one thing in QMR, you don't need to, should I say, cram the pattern. You don't need to cram the pattern. You need to just understand the concept the pattern is built on. So on A plus setup right here, you can see we had the low, and the low got swept. So this right here is the sweep. Then we don't pay too much attention to this side. If you use this area to validate your QMR, you end up missing a lot of trades. So after the sweep, the next important thing is that the sweep needs to break structure. After you have a sweep, that sweep needs to break structure, and this is one of the major characteristics of what makes it a QMR valid. So you should always expect a break of structure after a sweep. If not, price is not really trending in that direction, and there is 80% chance or 50% chance that setup is going to go wrong. So we have the sweep, and the next thing we have is the pullback, which is we call it structural liquidity. Which is our structural liquidity. And for the A plus setup, the structural liquidity also breaks structure, and that's this break of structure in that intended direction. If it's buys, if it's sells, yeah, it also needs to break structure before coming back into the protected low. That's exactly what an A plus setup is. So there is few perks in QMR. For example, there is also a rule that says that if let me I don't know, should I just go straight? Okay, let me explain what validates both the sweep and liquidity before explaining the other rule. So what validates the sweep? The sweep in this hand needs to be at least 70%. The sweep needs to be at least 70%. There's an idea behind what a sweep is, because a sweep is a valid low, a valid high that should reverse the market. But for some reason, for this word that many traders like using, that's high or the low got manipulated. And when it gets manipulated, when you say that my entry got manipulated, you'll notice that when price just takes you out, price start moving in a intended direction. So the sweep should not really be that far from the protected low, should not be that far from the other block it swept. That's why I say it's 70%. You measure it out to your Fibonacci. We also get live examples. You measure it out to your Fibonacci, and the sweep here should be resting at least 70%. So that's for the sweep, at least 70%. That's what I said. And for the structural liquidity on its own end needs to be at least 50%. Once the structural liquidity is at least tapping the 50% or inside the 50%, that's what makes the structural liquidity valid on its own end. Now, for the rule I want to explain, it's about how the structural liquidity is being positioned. For example, when you look at your sweep right here, the structural liquidity, if the structural liquidity is in the same level, or you mark out your your order block from your QMR. You mark out your order block, and you notice that the liquidity is on the same level. It means that the liquidity has tapped into that point of interest right there. So in QMR we have two entries. We have the QMR right here and the protected low. We have the QMR and so there are actually two entries in QMR. We have the Quasimodo entry, which is right here, and the protected low, anything you want to call it, and the protected low. So if the inducement or the structural liquidity is in the same line or appears to have tapped the order block or the QMR, you just know that after the break of structure, when price comes down, it will come to the protected low, tap into it and bounce off it. But in scenarios where price did not tap into the QMR or two, so there are some people that actually trust this stuff very well, that they just they just mark out the Quasimodo entry, then wait for price to come into it and start pushing on. But it's very advisable that when you're setting your limit order, you also cover the protected low, because some kind of lightning manipulation might occur. I know many people don't like that word, manipulation in trading, because price is actually doing what it's right every time. So when price is manipulating, it's actually doing the right thing. So yeah, it's always advisable that you cover the protected low, regardless of if the inducement, or the structural liquidity tap into the QMR or not. You always cover the protected low. But in situation that price tapped into it, there's people that will just take, there is some people that, in order not to miss the entry, they'll keep it below the structural liquidity, and there is some that will just mark out, take from the other block, the protected low, the other block in the protected low, which is actually the best when you see that your QMR was mitigated. This is the best. And now you also notice that there is reason why 70% works for this sweep right here, because you will always be required to cover both the order block in the QMR and the protected low. Now if this stuff is like 50%, it's not going to work, and 50% looks like, let me draw 50% on the share scenario. 50% looks like the whole stuff just left you. You won't got this manipulation. I don't know about you. Looking at this stuff, let's say it's right here. Looking at this stuff, I'm not going to expect it to play out. You can see the sweep is about 50% right here. And if I'm looking at this stuff, I don't think this is a valid QMR setup. And if somebody out there thinks it's valid, it's kind of entry pattern I'm not going to take. So that's why you need at least 70%, so you can efficiently cover both the QMR order block and the protected low order block. So that's it for the A+ setup. This QMR setup is actually very, very easy. After identifying and validating the sweep, the inducement, the next thing that is actually important is just the placement where did you find QMR, which we'll get to after explaining this B+ and C+ setup. So for the B+ setup, what do we have here? We have sweep, and the sweep, like I said, the sweep should be at least 70%. You don't use here to validate your QMR setup. After the sweep, you must see a break of structure. This is for the B+ setup. So break of structure is very important, and because of the break of structure of the sweep, that's why actually B+ setup, and the C+ setup is the C+ setup. So the next thing you see is price will give you a structural liquidity in the rise zone, and you will notice that the inducement will not break structure. That is a very distinct characteristics from the B+ setup and A+ setup. The structural liquidity will not break structure, and price will come down to tap into the point of interest and continue. Now the B+ setup works just like the A+ setup works, but you understand that majority of the time QMR is a reversal pattern. You can use QMR as a continuation pattern and a reversal pattern. When we talk about reversal pattern, it has to be like you have a higher time frame POI, and you notice that price comes into that POI on lower time frame, creates a QMR. Now you use that as a reversal pattern, and in that scenario you would prefer if the QMR is actually something that is valid. So I like when everything breaks structure. That's A+ setup. For the purpose of the video, focusing on A+ setup. So let me show an example. I think exactly GBP USD is the weekly time frame. think weekly time frame or monthly time frame. I think it's monthly time frame or 3 months time frame. We had a point of interest right here. A point of interest right here for reversal. You have a point of interest right there for reversal. And on daily time frame, what did price do? What did price do? Price created a QMR right in that point of interest. Price created a QMR. Let's check it out. We have sweep, and you can see that this sweep broke structure. If you look down to validate it, you notice that the sweep broke structure. I told you that you don't use here to validate your QMR. The sweep broke structure, and what do we have here? If I measure this stuff should be at least 70%. If I measure it is up to 70%, and we have our structural liquidity, which actually filled the 50%, and you can see that it's actually in the same line. It tapped into this QMR order block. So where will your next entry be from? Your next entry will be from the protected high. This is exactly what I just explained with the buy scenario, and I'm expecting price to tap into it and fall down to take out this low. Sometimes when you're trading a QMR, like you don't just you have a fixed RR. Same if you're trading any type of strategy where other block liquidity, you need to have a fixed RR. So you don't just start aiming at the whole thing. It's 5 RR, 3 RR, 4 RR. You just take it and you leave the market. So this is QMR as a reversal pattern. So yeah, that's why it's important for the QMR to have. It's very important for the QMR to have layers to it to be valid and everything, because especially as QMR has reversal pattern, imagine if that GPUSD it didn't actually give a valid QMR entry. There is high chance that setup is going to fail because of it. So I think that's the distinct difference between the A plus setup and the B plus setup. Just my own advice, always take your A plus setups, especially we that trade that we just trade other type of SMC entry pattern. We also trade QMRs, and I prefer using QMRs for I prefer using A plus QMRs because yeah, something like GPUSD. I did the projection in one of my video that demand and supply zone. Yeah, I did the projection of that GPUSD sell, and I trade other type of SMC entry pattern. But I also like when I see QMRs, I don't leave QMRs. Wherever I see that, I don't leave QMRs. So this is for the B plus. You know, see that the inducement, the distinct difference between the A plus and B plus is that the inducement doesn't break structure. Now the difference between the C plus and the other two is, okay, what we have here, we have our sweep. I remember you don't use here to validate your QMR. Then we expected the break of structure. If you notice, an inducement formed before the break of structure. This is why this is C plus. You see that means sometimes this is when we talk about internal liquidity, like when there is a liquidity before the main break of structure. For example, we that trade order block, and okay, there is a liquidity right here. Okay, this stuff is still valid. It means this mainly applies to QMR setups. An inducement, a structural liquidity formed before the break of structure. This is very dangerous when it comes to QMR. As some people that call this a B plus, but me, I pay so much emphasis on the sweep that occurs after the break of structure. After the sweep that occurs after the break of structure that occurs after the sweep, I pay very much emphasis. That's why this is a C plus setup to me. And if I'm to take this stuff, I would have expected another inducement to occur, maybe create a double bottom or something like that. Then price should come down again to tap into the point of entry. That's when I'll consider this an A plus setup. So that's the difference between the A plus, B plus, and C plus setup. Let me just draw out the set scenarios of this stuff. Okay, this is simple. When you understand the logic, this is the sweep, the break of structure that must occur after the sweep, and a valid inducement, another break of structure. This is the A plus setup. When you understand the simple logic behind it, drawing this stuff becomes easy. It's not like something you just cram. It's something you understand. So the B plus, we have the sweep, and you notice that the inducement doesn't break structure before coming up. This is the B plus. For the C plus, we have this sweep, but inducement forms before the break of structure, and price taps into it. All this stuff works. Sincerely, all this stuff works, but Each of them depends on the direction. As I explained, when you use QMR as a reversal pattern, it's very important it must be an A plus setup. When you use QMR as a reversal pattern, it's very important. It's very important that it's an A plus setup. Maybe when it's just a continuation pattern, even even this B plus will work when you use that continuation pattern. Then you can use that 80% you're liquidating to move 80% before breaking structure, before reversing back. Then you can use it for this B plus setup. Yeah, but this C plus setup, I mostly don't just like it. I mostly don't just like the C plus setup. So this is the QMR patterns, the three types A, B, and C in both buys and sells. So the next thing that we'll discuss in the next part of this video is positioning of your QMR. So positioning talks about a lot about your QMR. Is it in the right zone for a buy? Is it in the right zone for a sell? That we'll talk about. This way, some people might go on after watching this video. Some people might go on trading QMR as their only entry patterns. So you need to get it right. And also, if beginners, I think when I started with QMR. If you can understand QMR very very well, I think other SMC entry patterns will make that difficult for you to understand. So QMR is very important. Let's get into the next part of the video. Next part of this video, once you understand this particular one, you can go and back test. Then when you back test, you fact check how many did you see, how many played out, and there is very much less QMR in the market. So you need to actually keep your eyes sharp and know the valid ones, right from the sweep, the inducement, and also the positioning. So in this positioning, this is exactly what this positioning means. For the buy scenario, this is a buy swing structure, and this is a okay. This is a sell swing structure. So when I talk about positioning, I'm talking about where is the QMR in the main structure overall. Where is the QMR in the buy swing structure? You have to take QMR setups that forms right here in the discount level. This is basic stuff. You have to take QMR setup that forms in the discount, and for the sell, you have to take QMR setup that forms. For the cells, you have to take QMR setup that forms in the premium. Very, very simple and basic stuff. In case when you're done watching this video and you still don't understand, you can just go to Dax the brand, go there. Like I learned a lot from him. I think 2024, I learned a lot from him on this particular topic. So once you don't understand, you can also go back there and watch to get to understand this stuff more. Okay, you have to sell from the premium and you have to buy from the discount. Now drawing this stuff looks very easy, but how does it actually look in real life? So this is actually how it looks like. This one you could measure it from anywhere. You see there, this the structure. This is the swing structure, and in this swing structure, where can we find this QMR setup? So yeah, there's a QMR setup here. But you notice that this QMR setup is B plus, and it's in a reversal point. Like I said, reversal point. I don't know if there is a point of interest to the left. I don't know if there is a point of interest right to the left here to validate this thing more. I don't need to start going over too much details just to prove this stuff. You can see it failed, and you notice why it failed. Like my own personal take on why it failed. There could be more reasons too. What we have here, we have our sweep. Like I said, you don't use here to validate. You don't use here to validate your QMR. Then what we have here, we have our break of structure after the sweep, very important. Then what we have, inducement, and what we're expecting was the inducement to break structure, which the inducement did not break structure. It was the red flag of this inducement and it did not break structure. I would say that is one of the maybe there might not be a higher point of interest supporting this QMR to the left, but one of the reasons why it failed is that the inducement did not break structure. That's my own take. That one of the reasons you can see that price is still trying to break structure to the upside, even though it failed, it would have failed woefully and price would have been selling crazy. But this inducement did not break structure. Let's measure out our sweep. Okay. Let's measure out our sweep. What can you see here? Which position is this sweep in? This sweep is occupying 80%. Valid stuff. Valid stuff. This sweep is at 80%. What we have again? Where's our in structural liquidity at? Our structural liquidity is at 60%. Very simple. When you measure stuff of when you measure it like this, you get exactly what you need. You take the trade. So you can see the structural liquidity is at 60%. The only problem that it did not break structure was it in the right zone. This is the discount zone. This is the swing structure. This is the discount zone. You have to take buys from here. You have to take sells from here. Very simple. Let me check if I can whip up another example. This one played out. This one played out. Like I said, I don't need to go to this. I don't need to go to the left to find out if there is actually this stuff looks like QMR as a reversal pattern, and usually we need a reason over to the left. But if you trade only patterns, when I say if you trade only patterns, that you don't care about anything, you just trading the patterns. Once with QMR, even if you trade only patterns, as long as you take them from the right zone, you still end up being like 40% profitable. Imagine if you take 4 hour on 40% profitable, you're still profitable. That's why I like QMRs. Like, it's just there. No much brain work needed. It's just the QMR is very easy. The only thing why most traders like me, we actually start adding other advanced SMC entry patterns is because QMR takes so long to present itself. But it's actually a cool chill pattern if you're like someone that has a lot of money. Back then, what we used to do is what we do is on Saturday now we chill today, or you could be backtesting today to get off more secrets about the market. And on Sunday, our mentor then, so I learned from that on YouTube, or I paid someone that learned from him to learn. So what we'll do is on Sunday we'll come together and start backtesting. Our mentor will start backtesting, and of course we'll have backtest before then he'll start backtesting. And when he's done backtesting, he'll start picking out entries. And these entries is the only thing. Once we pick out like 4-5 entries, any other setup that forms within that week, we won't take it. We won't take that 5 entries that we found out. And usually 2, oh my god, it was very, very nice. 2 or 3 will play out of the 5, or 2. If that 2 plays out 1 to 5, we are still good. That's how nice it was. Just that sometimes sometimes none of them will trigger, or that your QMR needs a lot of patience, and if you have a lot of money, you can wait patiently. But when you keep looking at Tony, Lingard, all these people that are always pulling up with a lot of profit every day, you just decide you want to trade like them. That is actually the major reason why you switched up. And even till now, I still have an account for just QMR setups. So look at this stuff. Do I need to switch it to my 50% for you to know? For you to know that, yeah, it's in the right zone. It's in the premium zone. This setup formed in the premium zone. That's one tick, right? It was in the right position. What else? What else do we have here? We have our sweep. Yeah, sweep. And like I used to tell you that you don't use here to validate. Well, yeah, it could be breaking structure, which is a very nice thing, but you don't actually use there to validate. The next thing you pay attention to is, did the sweep break structure? Yeah, the sweep broke structure. So after the sweep broke structure, I don't need to measure this stuff. You already know this stuff is resting at least 90%. You can see what a very nice sweep looks like. It's a valid high. This is a valid high that price should not break. Most of them have liquidity, but price will sweep them. And when you see price sweeping them, what do you have next? Before price moves few pips, you see that price will start reversing down, break structure. Very nice. What do we have again? We have our structural liquidity. And what do structural liquidity do? It broke structure. A plus setup. What again? You mark out your order block. You can very much include, you must, it's not you can, you must include the QMR by the left. You will include it. You cannot just concentrate on the order block alone, because in this situation you can see that price came up, tapped the order block, imported low. But most times it's very important to note that you should cover your QMR as long as your structural liquidity did not tap into your QMR. If structural liquidity did this, yeah, we'll wait for a top here. But structural liquidity did not tap into your QMR, so you have to make sure you cover your basis, you cover there, you cover your protected low, you give your excess some breathing space, and that is all. That is all. You take out your 1 to 3, 1 to 4. Probably 1 to 3, 1 to 4. If you're trading QMR, 1 to 4 is enough because sometimes you have bigger sales. So yeah, 1 to 4. You just make sure you focus on the break of structure here. You leave the market. So this is the buy scenario positioning, the sell scenario positioning. What else do I need to talk about? What do I need to talk about again? So I think this is actually all. Then of course there's a few more information you might actually get from backtesting yourself. And if you want to learn how to pull out information through backtesting, go and check out my last video. That what I explained in that video is exactly what I look out for when I'm backtesting. I ask myself a few questions, I answer them, I use the criteria, put it, I apply it to other entries that failed and the ones that played out to check if it's actually what taken down as a rule and the rest. So yeah, this is exactly what you look out for when you're looking for your QMR setups. If I go on and on and on, I'll see more stuff. And like I said, the A plus setup is the best setup. The A plus setup, especially as a reversal pattern, the A plus setup works best. As a continuation pattern, like price already bullish, and you're just looking for your trade. You're looking for an entry to continue the buys, and you see a QMR setup, a B plus setup. Yeah, this man doesn't need to break structure. Overall, everything is still bullish. Nothing is stopping it from the left to fail the QMR. You can take a B plus setup. It is C plus setup that I don't support. I don't support the C plus setup at all. I just put it out there. So some of you will still have questions like, what if price doesn't break structure after sweeping? That's the question you ask, and there is already a pattern for that. And does it work? Probably does. I don't have any scenario where it works. Probably if you check out the market, you definitely see a scenario where that stuff works, but I don't know how that scenario. See you guys on the next video. I hope this video was very helpful. Please like and subscribe. Like and subscribe. It won't cost you anything. Just like and subscribe to support me. I don't know when I'm making on that video. Probably next 2 weeks or something. I'll make it on that video. Maybe I'll making that demand and supply, which was very cool video of how I use this our normal SMC entry pattern, not QMR. I treat QMR by the side, but how I use this advanced SMC patterns to know the right zone to buy and sell. Yeah, just like the way I talk about QMR, there is also a way I also use this stuff in our normal liquidity order block, breaker block, order block to know where to buy and sell. So that will be demand and supply zone. I'll be making the part 2. So make sure you go and watch the part 1. See you guys on the next video.